Hello Maverick traders, this is Imri and welcome to today's currency recap. It is Thursday, April 27th. Well, what a day indeed. We had a big miss in GDP numbers, which the market took as a positive sign. I suppose anticipating the Fed is going to be pressured now to put a pause on their interest rate hiking cycle. Never mind what that might mean for the broader economy, but for right now anyway, the market's seeing this as good news. Also, the market closed higher based on upbeat earnings. This was the best day for the Dow Jones Industrial Average since January, I believe. Crypto's up big as well, especially after yesterday's performance. All right, so first up, we've got the S&P 500. This is our latest attempt at breaking out of this inverse head and shoulders pattern. The amount of times we've knocked on the door of this blue neckline here is pretty astounding, really. So yet again, we're at make or break time. We have yet to see a strong daily closure above this neckline. If we trade above this neckline for 3 days in a row, I'd say that's a pretty convincing technical sign that we're going to see prices head much higher. So that'll be fascinating for me to see, whether or not the market can manage that. Moving over to government bond yields. So the 10-year yield actually, rose today. Which means, of course, that bonds declined in value. So that's interesting, right? The reason that's interesting is because flight to bonds as of late has been taken as a sign of flight to safety. So now that yields are ticking up and people are moving out of bonds and presumably moving into riskier assets is a sign that market optimism is returning. So keep an eye on this chart, very important. If rates go too high, however, it's a fine balance with rates. You don't want rates to go too high too quickly. That would also spook the market and would presumably drive investment flows into the dollar and out of risk assets. But yeah, keep an eye on this chart. It's a very important one. I'm sure we'll be sharing it again in the future. And then finally, we've got crypto. This is a weekly chart of our crypto basket. And as you can see, well, we're still in this resistance area. I'm not too interested in immediately pulling the trigger in crypto unless we break out of this area, that gray shaded area just below 36,000 and stabilize above it. The only thing that makes me nervous about crypto is how on the weekly chart, we are quite far away from the 20 and 50 period moving averages. So I think this market is quite extended. We could see one push higher before we get a more significant multi-week pullback. Just keep that in mind. Market is, in terms of the outlook, is a little bit mixed here, but I'm going to go with a mildly positive +1. And in tomorrow's news, we have the core PCE price index, which is the Fed's preferred gauge of inflation. So we'll have to see what that's looking like. I think the market's going to be hoping for a big miss on this inflation reading. That would definitely most likely send the market higher. So keep an eye on that news event. It's coming out early tomorrow morning at 8:30 a.m. Okay, moving on now to currency analysis. So great day for cryptos overall. Bitcoin, the biggest winner on the day, followed then by Ethereum, Litecoin, and finally Bitcoin Cash. Over on the fiat side of things, it's as you would expect. Commodity currencies outperformed with the New Zealand dollar leading the way, the biggest losers being the yen and the dollar, and then the Swiss franc. So safe havens not performing very well, and risk-on currencies performing well. It's exactly what you would expect on a big up day for the stock market. Now, in terms of velocity, I don't want us to get too crazy here. The pound's looking good, as is the Aussie and Canadian dollars, and the euro and the US dollars and the New Zealand dollar somewhat neutral. And then on the negative velocity score side, we have the Japanese yen and the Swiss franc. So with all that said and done, let's hop into TradingView to take a look at some possible trades, because I do think there are some interesting things setting up. So for you guys that have followed me on an Elliott wave basis, you know that 3-wave sequences are indicative of counter trend movements in the market. And I think we've just finished this 3-wave sequence here in the yen, and we're likely ready to head lower. I still think we need to poke our heads below this green support area. Zooming out to sorry, give me a second. Zooming out here to a daily chart. You can see here we double bottomed and then bounced, but I don't think this double bottom is for real. I don't think we're just going to immediately go screaming to the upside here. It's likely we need to pull back quite a bit first in the yen. My hunch, like I said, is we're going to break below this double bottom, fake the market out, and then we're going to see a larger rally in the yen, which will probably coincide with a larger risk-off rally a risk-off movement in stocks and crypto and the risk-on currencies. All right, next up, we've got the dollar here. So we've still broken out of this wedge, but not much movement to the upside. And zooming in, taking a look at an intraday time frame like the 2-hour time frame, you can see we kind of have this rising wedge. So we broke out of the descending wedge, but are kind of trading in a rising wedge. And there is some bearish divergences here taking shape in some of the momentum indicators I follow, such as the MACD and the RSI. So I think the dollar is tricky here. If we don't accelerate to the upside out of this rising wedge immediately, then I would favor another round of decline in the US dollar. But the dollar, I think, is very tricky right now. There's probably better currencies to be trading. Okay, so the Swiss franc, after putting in a really good show, has reached overbought conditions in the RSI, along with some mild bearish divergence. And well, as you can see, we had a down day today. So I would suspect that continues tomorrow. I'd look for follow through in terms of Swiss franc weakness. Euro is a little bit of a different story. We reached the next resistance target. The RSI also mildly overbought here, but we haven't gotten as large a sell-off in the euro. So I would look for reversal patterns in the euro. I'd look for euro weakness, considering we've met this large resistance level. And yeah, we'll have to see what happens ultimately. But I think the euro could pull back here for a couple of days before putting in another convincing rally. In terms of upside targets for the euro, the next upside target would be the swing point from August 2020, which comes in at 135.57 in our euro basket. Okay, next up, we've got the pound. No change to my forecast here. I think we're just going to keep marching upwards until we meet this pivot area from Feb 2022. So I still like to buy the pound on dips. Okay, next up, we have the Canadian dollar, still stuck in this range. So if you followed my call of selling the CAD in resistance, you would have done very well. We're now in the midpoint of the range where I think it's risky to touch a range-bound currency. I'd wait for it to drift towards the lower extreme. Or if we go straight up from here, the CAD finds support and just trades up, that's probably a good sign that it might break through this resistance barrier here. But either way, I think the Canadian dollar is very tricky. Personally, I'd leave it alone until we near one of the extremes of this range. Aussie dollar. Okay, so we got stuck in resistance, didn't break out this trend line, and traded lower instead. Met my next downside support target, or nearly got to my next downside support target, which is the pivot from December 2021, before putting in an update now. It's tricky because we have these bullish divergences forming in the relative strength index here, very sharp bullish divergences, but there hasn't been convincing follow through. So I'm not going to look to play the Aussie on the long side until we break out of this trend line. And I think the risk-reward equation is skewing to the upside. What would change my mind? If we break convincingly below the December 2021 pivot, then that's like a trapdoor that opens up and there really isn't any support for the Aussie dollar until we get closer to the March 2020 lows. In the New Zealand dollar, it's a similar story where I think the Kiwi kind of has to put up or shut up. We've broken below the 61.8% retracement of this entire larger rally here that started in October 2022 and topped out in December 2022. The Kiwi dollar's never really gotten oversold, so it's tough to say if it's reaching any kind of extreme here. I also think the Kiwi dollar is tough. I'm not in a huge hurry to trade it. It's a little bit of a weird situation right now because we have one clear asset currency in my mind, which is the pound, and then we have a bunch of liabilities. So I'd be looking to buy the pound on a dip, particularly against the yen, potentially against the dollar, Swissy in the short term, and then the commodity currencies would be highly chart dependent. So I know, bottom line, that I'd like to buy the pound. Against what will depend on the day and depend on the chart setup. All right, I hope that was helpful, traders. So in conclusion, equity is likely higher, given today's rebound, especially if tomorrow's inflationary data comes in weak, then we might see the market continue to trade higher. Continue to look to trade around news events. That's definitely where the volatility is. The important thing with news events is just keep in mind that the market tends to give back most of that move after the initial burst of energy is released. Great example was today with the GDP reading. Dollar strengthened originally and then gave back a lot of those gains, especially against the pound. Trade less, not more. Focus on quality over quantity. And of course, always pay attention to proper position sizing. All right, that's it for me, traders, for this week. I'll see you soon. Take care for now.